Very exciting stuff, guys. I'm so excited for Monday. If anyone cares, do people care about my predictions for all products? I did write them down.
No.
No?
But we have 1 minute left. Can you throw up that video that I sent in the private chat? And I want you to just pause it at 1 minute and 30 seconds because I had a really, really, really good laugh about it earlier today.
So let it play till 1 minute 30.
A video on Steven's article. Just listen to how he references us. Okay, just listen.
Article on Seeking Alpha. He is my number one SoFi guy. He does that weekly podcast with future investing and those two other dildos. I don't really care about those young guys. They read a lot. Steven Frio is
and he's playing World of Warcraft the whole fucking podcast, and he's not the dildo. Like, this is hilarious.
Hey, neither am I. I'm not a dildo. I'm future investing.
Yeah, I can remember Tannor.
Can we confirm your name change is going to be Tannor Manson on YouTube? Can we do that right now? Can we change it?
No, future investing is way better.
This has been the SoFi Weekly Podcast. Tanner, Steve, Dildo 1 and Dildo 2 signing off.
Bye, everybody. See you Monday.
See everybody.
All right, guys. So we started early today because we just got some bank numbers. This is supposed to be released. This is like a legal thing they have to do.
This is only SoFi's bank's numbers. The FFIEC releases the bank numbers. In Q1, we discovered about it where it was a couple of days before the actual earnings report. And then in Q1, we knew what the deposits were before going into the Q1 earnings. Shout out to Everything SoFi on Twitter because
I'm going to share them right now. Yeah.
Earlier today, I think it just came out.
Yeah, guys, we just saw that SoFi has 3.2 billion in deposits. Shout out to Everything SoFi. Thank you so much for sharing this. You definitely follow them on Twitter. Versus 2.7 billion. Some analysts didn't think 2 billion was going to be reasonable.
It's super fresh. It was last updated today, and I think it's after market close today as well.
This was updated today, correct?
Last came out 10 minutes ago. Yeah,
it just came out,
and that would make sense because markets are closed. They're reporting Monday morning.
So 13.248 billion in total deposits.
Like that deposit number really surprised me. Because I know that in the fireside chat, they said, hey, like we're tracking for 2 billion. Like that's really what we're looking for. And meanwhile, they come in at 3.2 billion, something like that for deposits.
13.2. Yeah. 3.2. Yeah, they were tracking for 2.7, right?
In Q1, they came out with 2.7. And then they said in Q2, it's probably going to be around 2. And then they came out with like 3.2.
And do you remember him saying it's going to be 2 billion? Because I remember him saying at some conference it's 2 billion.
JP Morgan fireside chat, he was saying that's like what we're looking at is 2 billion.
Some didn't think they would even get to 2.
Right?
Where is the money coming from, bro? That's coming from the big banks.
That's what they said last time when they were saying, how did you even get to 2.7? Or how is this deposit growth going so fast? Because in the course of a year, they went from like 0 to 10 billion, basically, because they got their bank charter. And then like last quarter was the 4th quarter that they had a bank charter and they went from 0 to 10 billion. Now they're just even growing at a faster pace than that.
Steven, raw thoughts, 3.2 billion in deposits. If I told you that's the headline number on Monday, what do you think?
I'm not shocked, but look, if these numbers are real, dare I say that there's a chance they hit GAAP profitability?
I was thinking that.
If this is going to be a really positive quarter, they're going to need a lot of SoFi Money members, a lot. And it's seemingly like that blew way past my expectations. Like $3.2 billion in new deposits is insane.
Yeah, the deposits grew by 30%. That's amazing.
The total amount of loans held for sale went down. I'm pretty sure every single loan is on SoFi Bank. That means that we potentially sold a lot of loans. They could have sold 3 billion in loans here, unless we're holding loans that are not on SoFi Bank. We had 16.2 billion loans held for sale last quarter on the 10Q. This quarter, just on the SoFi Bank numbers, which unless they report differently somehow, showing what, 13 point something? It means we probably grew the portfolio by 3 billion and it's also lower by 3 billion.
Would the higher deposits just expedite that even more? Because is it like liquidity issue or capital requirements? Like
higher deposits means we have more capacity. And there's a lot of flexibility here, right? I don't think that it's linear. The demand for personal loans was so large that, in fact, they wrote a bunch of new personal loans, sold new loans, and still grew their lending capacity, which would mean that we're in a much healthier place. It literally seems like SoFi, it does seem like they're striking on all ends. It really does. They would have only sold loans if they sold them for a positive. They could have literally sold loans at a lower gain on sale margin and literally replenished it with all new levels of personal loans that are coming onto the platform. The want for personal loans at this level is extremely high due to the high level of revolving credit card loans.
301 million in total non-interest income, 431 million in net interest income.
This is the Q1 earnings report. Net interest income was at 201 million, more than double from what it was in 2022. 431.7 compared to Q1 where it was 201.
And then non-interest income is at 301 million. Last quarter, it was 136.
Let's do the math real quick. So net interest was 201, and we just went from 201 to
431.
431. We lost 34 million last quarter.
I'm just thinking, like, if this is 730 million, we don't know what the expenses are, but a good portion of that is going to drop to the contribution profit.
What are we missing? What are we missing? Because the conclusion is we're going to be profitable, but is there something you're missing right here?
Am I crazy to think that we could be profitable? Like, is that
No,
that
not
a
crazy.
wild
It's not
statement?
crazy.
No, because we lost 34 million last quarter. Noto said, think about his words. He didn't say in Q4. He said by Q4 that we would be GAAP profitable.
Right.
So if you bring up a quarterly chart of net income, it's gradually been getting better. Look at the September 22 versus the December 22. You went from 74.2 loss to 40 loss. That's 34.2 million. We lost 34.4 million last quarter. If they get another jump like that, you're right on the edge. And given the huge boost that we just saw in these numbers, it's not crazy to think that we're coming in GAAP profitable.
Analysts are expecting -6 cents. Whisper is at -4.
What if they come in with 1 cent EPS? What happens then?
If we come in at 1 cent, this thing is going to fly.
Yeah, and that 1 cent's not going to be financially engineered like Palantir's Q4. This is going to be real from operations, I imagine.
And you got to think we're not going back.
And we're not going back.
Now. If they hit GAAP profitable this quarter and then student loans come back.
I just want everyone to realize we have no idea what their expenses are. Looking at what their expenses were last quarter and then forwarding them now is not fair, right?
No, because as they grow, they're going to have more expenses.
And we don't know, because of the absolute jump in deposits, there could have been, like, I was expecting a much larger jump in SoFi Money users. I was expecting very close to the high end in members. I won't say that because I want us all to do a new member guess here. But that amount of high customer acquisition costs, like I'm talking about for all this time, can lead to a large amount of new expenses. Good. Even if we don't hit profitability, guys, we're 2 quarters ahead of schedule here. Let's SoFi grow the way they're growing. We have a terrible marketplace. The competitors are dying off, and SoFi is surviving by holding on to their own loans. And even then they might have sold, which is
Nobody's
crazy.
expecting profitability this quarter. Which
one
is a positive. I mean, people are expecting, at least me, I was expecting. In September, we became GAAP profitable, and we're going to show GAAP profitable Q4 and forward. Right now, only losing 34 million and seeing these jumps, even with expenses going up, there could be enough spread where they come in with a 1 cent EPS. And I don't think that's unreasonable to say if the numbers are correct. Tanner's right. We got to see what the expenses are. As revenue goes up, cost of revenue goes up. We don't know staff.
Sales and marketing might go up.
That they've been hiring. So we'll see.
I'm seeing people in the chat just disagreeing in terms of whether this is year to date or if this is just for the quarter.
Honestly, would probably make more sense because, like, it's seeming like this was an unbelievable quarter. I'm not sure because I can't tell either way if it's, but yeah, still 3 billion in deposits is crazy, dude.
It looks to me the report was prepared 6:30 and updated today, probably minor revisions, so not year to date.
Some of the
That
things
changes a
are
lot.
year to date, but That's not on all the aspects of this, though.
Well, the one thing it can't change is deposits, which is important. I think deposits is the top line number. If it's year to date on net interest income, then that's definitely going to hamper gap profitability.
Right. If it's quarter over quarter, we did the math. It's like fantastic. Net interest income, 200 million. And then net interest income here is
431. That would mean that it went up by 230. It went up by 30 million.
Yeah,
So-
like 15%.
Yeah, 15%. And then 136, what was it? 300 and
The 9 was 301, and that's 136. So call it 164.
Those numbers will affect gap profitability, but deposits will be the headline number.
Yeah, I mean, look, if this is on a yearly calendar basis, then it completely changes it, and the whisper numbers seem a lot more accurate. If these numbers are on a quarterly basis, I would think it's going to be gap profitable.
if it is year to date and we actually have to subtract the Q1 numbers, that still, I think, puts us in line for -3 cents EPS, which is the number that I was really looking for. Could they get a profit boost from Wyndham? Oh yeah, that's the other thing to consider. The Wyndham is going to be reflecting in their numbers as well, right? Because that acquisition goes into the books on this quarter.
Wait. So that means we recognize the cost of Wyndham in this quarter?
Yeah.
So that
Yeah, if it was a cash deal, which it was, right? It was an all cash deal.
I think it was all cash deal, yeah.
So that could lay off gap profitability for sure, right? Because that's like 200 million.
This is definitely positive, but I want to also remind us that in Q1, we had this exact same conversation and the bank numbers came out very well. 2.7 billion in deposits in Q1. We thought SoFi to the moon. I think Chris Hager even came on here, like probably one of the most rational people. And he was saying like, oh, we could hit profitability. And then, the technology segment took a hit in terms of the margins. We lost current. There's other numbers that I'm saying that are not reflected in this report that could make it a mixed bag. But the caveat that I will say is we don't necessarily need to be in profitability on Monday for us to have a squeeze. We just need to be better than the consensus. And currently the consensus is completely sandbagged from an analyst perspective at -6 cents EPS. I think even the whisper is something that we can easily beat.
You have to give Noto and the management team an extreme amount of credit for execution. This chart that I made completely validates that, because you think about them getting one leg and one arm tied behind their back when the moratorium started in Q1 2020. They found a way to still grow the loan book through personal loans, and then they developed the technology and financial service platforms. And those revenue streams have been growing. You look at the yellow line for financial services, that is growing quarter over quarter. Even though tech plateaued a little bit, they're both still in their infancy, and they continued to increase lending. This is a management team that in the face of adversity executes. They don't just sit there and stress out and fold. They figure out creative ways to get around the problems. This team deserves so much credit that they're not getting. And if they can do this during those times, what's going to happen during the good times?
I wanted to go back to Tevis's point about the idea of overblowing this. I'm not overblowing it by in the idea saying that they're going to be profitable. I'm still not stating that because I'm not trying to say that they're profitable. But the fact that they could have brought on all these new members, did bring on all these deposits, all of these things, while Lending Club is having such a hard time, these are real numbers. It is something to really sort of give credit to SoFi, saying, you know what, they do keep executing over and over. I was getting worried that maybe guidance wasn't going to beat, because the marketplace that Lending Club is talking about, we have the same marketplace. We're selling to the same people. If they're saying it's bad, it's going to be bad for SoFi as well. Guidance might mean that we're coming to an edge of like, okay, well, there's only so little leverage ratio that we can have. We're going to try to grow a larger book value and host more loans here, but that can only happen so fast. Lending Club said their demand for loans is going to be really high. The demand from an institutional standpoint is really, really low.
If they're not forced to sell loans right now, the fact that they did so means that they got a premium, just logically speaking.
Yeah, and also the demand from a consumer standpoint could have been so strong that like we could have sold $1 billion and gotten $1 billion back, which just means that we got higher APRs and potentially still got 2 or 3% gain on sale margin.
I mean, that's what it seems like to me, that they very well could have sold out of previous loans because they felt they could have made a larger spread on rolling that capital into new ones.
The only thing that I've worried about for SoFi for this upcoming quarter would have been guidance.
I don't see how they're not going to give us another guidance increase considering we have a definitive date on student loans.
Okay, so number one is student loans, but number two is, remember, their full year guidance was directly attributable to their macroeconomic indicators. And by and large, it's looking to be, I think even Fed members were saying, we're tracking for a soft landing, quote unquote. I hate to use that term, but my point is it's going to be better than expected or better than what the macro landscape was in Q1. So that could also be a catalyst to raise that guidance.
Lending Club said the marketplace is going to be the same as it is today, if not even worse, for the rest of 2023. SoFi is going to need to hold their loans. I'm not 100% sure if all of those loans are all on the bank, which is what I originally thought. But still, that means that they sold a lot of loans, which could also mean that there's a lot of income there that is not on the net interest side. Essentially, our entire loan portfolio is technically held for sale, and the marketplace, the buyers for loans are putting too steep of a discount on lending that no one's going to buy that. Or if they do, it's going to be at a steep discount. Lending Club came out and said, essentially, regional banks, because they're struggling, are flooding the market with commercial paper. It's like any other supply demand issue, right? You look at real estate, there's massive amount of houses up for sale and not enough buyers, the prices come down. You have a massive amount of loan receivables up for sale because your banks are finding struggles right now. It's a buyer's market. The buyers have the advantage and get to be very choosy about what they buy.
But if SoFi doesn't have to sell the loans and they're not in a position where they don't have to sell them, then none of that matters. If SoFi can generate a larger spread by holding than selling, and if they don't need to sell to raise capital, it's a moot point. It doesn't matter.
Last quarter, they had $16.2 billion of total loan portfolio up for sale. And now it's saying it's 13.1 or 13.2, which means we did sell 3 billion without adding any new loans. So assuming what I said, that they did what, 3.7 billion of originations, maybe it even has it on that thing for SoFi Bank. However, I didn't see it. That means that they sold a lot of loans.
Of their originations, they may have sold off to get different loans on the books. We don't know until they give the commentary.
100%.
So it's not worth speculating on it, because even if they decreased by 3 billion but wrote another 3.7 billion, they could have done it for a very specific reason, and it's not even worth speculating about it.
I mean, I think it's worth speculating. And it's not that we sold 3 and wrote 3. I'm saying if we wrote 3, we sold 6.
Even in the past, with regards to selling loans or even the entire macro environment in general, we've compared them to Lending Club. And when the actual results came out, they have proven to be fairly different, not only in terms of what they're saying or what they're seeing in the market, but also what their actions are. So to that degree, I think take it with a grain of salt whenever we throw Lending Club in the mix, because they are pretty differentiated and getting even more differentiated with each coming quarter.
I'm just saying the marketplace is the marketplace. It's about the quality of the actual debt that you're selling, which SoFi has a better product than Lending Club on both high income and FICOs. If it's a bad marketplace, it's a bad marketplace. What you guys continuously discount is the idea that we can just continuously hold more loans on our balance sheet forever and ever. It's impossible. There's regulations. There's only so much funding capacity. They need to have a certain level of leverage ratio. I'm sure they're not going below 12% roughly. There's only so much you can add. You can't hold forever. Like if they sold a bunch and then also rewrote new loans at higher coupon rates for themselves, then this could be amazing. We don't know. And it's all a matter of how much demand there truly is.
Do you think Wall Street is going to recognize the gravity of what you just said, which is that deposits are at this level after the Silicon Valley Bank collapse? Because the narrative on SoFi at $4 was that if Silicon Valley fails, there's no way this little neobank is going to win. Do you think Wall Street will reward that level of deposit growth?
Some of these places are allowed to have puts and also cover the shares. That's a conflict of interest. So I don't know what it's going to take for Wall Street to wake up to this and actually accept SoFi. Maybe this is the quarter, maybe it isn't. But if these numbers are right, we're going to see, because the narrative is going to have to be what happens when student loans kick back in. None of these numbers take into account that their largest loan segment was still firing on 50%. So what happens when all this actually happens? And if anybody listened to Powell's speech, they're going to cut at some point. Now, it may not be 2023, but they are cutting in 2024. So what happens when SoFi is growing like this in a bad environment? Student loans come back And then in 2024, the Fed starts cutting rates and you have the mortgage market come back and SoFi ready to go with their acquisition. The stars are aligning for 2024, maybe beforehand.
Read this number right here.
Short interest is 15.52%.
That seems low.
That's been going up. It was 11. It's been going up ever since SoFi crossed the $8 threshold.
It's not enough for a squeeze, though, right?
That's enough. 15 is enough for a squeeze.
15 is enough for a squeeze?
I thought it was over 20% for something.
No, they were hovering at between 11 and 13, and it's now recently gone up as high as 15.
Yeah, I mean, look, that's something else. 15% short. If this happens and this becomes profitable, you're going to see a short squeeze.
There's a reason why Wall Street is shorting this company. I totally see why they're doing it. They're looking at Lending Club, almost exact competitor whenever you look at, business style, nationally chartered bank, personal loans and deposit accounts. No one even knows SoFi exists yet. That's the thing. It's still such a small brand compared to the large players. The growth is happening so beautifully right now, and I can see why they're shorting it, because they look at Lending Club, they look at those numbers, and then they go, okay, well, SoFi is going to have to be in a similar position. They're equal competitors. But you have to give Noto and team so much execution credit right now, because they are in a bloodbath of a marketplace right now, which is what, and Chris has turned a bull since he said this, but he said, wait to give SoFi a recession. SoFi has been in a recession since the start. They haven't had a single quarter where they've been able to just grow. It's been constant problem after constant problem, and they continue to execute. Just wait until things get good. No wonder they're expecting 1 million new members in 2024, 25, whenever things supposedly will settle until we see the next Black Swan event, whenever that happens. But so far, SoFi is doing what others can't, and that's why people call them the last lender standing.
Is there any reason, obviously we can't predict, but is there any reason the market's just like, no, and they sell it off the way they did last quarter?
Of course there is.
Guidance. Why did we sell off last quarter again? Do you guys, was it Galileo? That was the nail?
No, it was guidance.
I don't know how we can really say guidance, considering they increased guidance last quarter.
On the Q1 call, they said they're projecting 470 to 480 million for Q2, which is 32 to 35% year over year. And they're projecting 50 to 60 million in adjusted EBITDA for Q2.
Exactly. So 50 to 60 million would be a decrease from Q1.
Because Q1 was what, 70, 75?
Yeah, 70 something. If I remember correctly, it was a little bit ago, but that's why the stock sold off, was guidance.
They increased guidance. It wasn't by much, but they keep increasing guidance. I think the macro is much different today than it was 3 months ago. We're going into a much different environment. It's a different setup right now. I don't think it was guidance. I think it was other things that Wall Street was looking at.
I don't think that we're out of the woodworks on the macro. You're looking at all the debt for sale right now. Rates were raised this week, correct? The loans that are up for sale do not have that. There's still lower APRs or coupon rates to the buyers versus what you can get today, which means there's still going to be discounts on those loans versus what's to come. So the marketplace is still going to be weak. And at the end of the day, SoFi holds their loans for sale. Wall Street's not going to like that.
All right, so let's go up and down the line. Members, what's everybody's guess? I'm coming in with 6.07 million for members.
Wait,
Total,
what?
No, how many are they going to add, Steve?
414,000.
Okay. That is low.
Tevis?
I'm going to go with 454.
What did they have last quarter again? 414?
433.
Oh, 433?
Yeah, so you went lower than last quarter.
Low, yeah.
Okay, so they have 433, and Tevis, you said 454?
Mm-hmm.
And Steve, you said 414?
I said 414, yeah.
He just puts he's just playing Price is Right. He doesn't.
Where's
Well, no, I guess before you, Tannor. I rewind the tapes.
The number will be 400 and...
Just fucking say it, Amit. It's not like you're not going to win
61.
a prize. There you go.
461. Okay, 480. It's my number.
Well, Tannor just basically gets everything above like 470.
That's
Products for Tevis?
680 is what I said.
Amit?
687.
Okay, 675. Or sorry, 674.
I actually wanted to come in lower, but...
Well, I mean, look, in Q1, they said around 660. So I don't know how granular we're getting.
All right.
I think it's going to be higher with more SoFi Money users. And honestly, Relay is such a crazy product that I think no one's giving enough credit to. People really like SoFi Relay for some reason. It's probably the most cross-sold product.
So I said that Galileo is going to come in with 133 million accounts. I say they're going up this quarter. No, I'm just saying the overall number is going to be 133 million. I don't know where they were at last quarter, 127 or so.
I've got a funny prediction for Galileo members. I think we'll add 0.
That's not good.
I don't think we won't bring in any. I don't think we will lose any. I think it'll be 0. And I mean, give or take 1,000 or whatever, like give or take,
How many did we have last quarter? New
or
members?
give or take 1 million.
We
Does
lost
anybody
members.
have investor relations open?
We lost millions last quarter?
Yeah.
Holy fuck.
Yeah,
It
'cause
went
we
from
lost the rent.
131 million to 126 million.
Oh, yeah, you're right. I remember that number. 126, yeah.
You want to go to revenue?
I agree with Tannor. I think Galileo might be flat. Or
Oh, that's so funny that you.
So we'll skip Galileo. Revenue, I'm saying revenue's coming in at 485.
I think revenue coming in at 487.
I'm going to change my number knowing that we sold a bunch of loans. I'm going to say 490.
I will say 492 and take the top range.
There you go.
Love it. All right, adjusted EBITDA, I had them coming in at 65 million plus, so I'm going 65 million.
Adjusted EBITDA, I'm going to go whatever corresponds to -3 cents.
Yeah,
I'm
me.
gonna go-
That was honestly my number as well.
Like
I'm
negative
gonna go.
15
I'm
million.
gonna go 71 million adjusted EBITDA. Tevis, I remember I pledged $20 to the channel. Yours or Tanner's that guesses the number of times notices loan or loans to earnings call closest without going over. Wow.
Okay, we'll do that. Tevis, how many loans does Anthony Notice say? Loan or loans?
24.
Okay, just to make it fair, I'll say, what'd you say, 24? I'll do 50 then.
Oh, wait, Tannor, it's closest without going over, so I'm screwed.
Closest without going over?
Yeah. Can I change my number?
Okay, go ahead and change your number.
37. Earnings is on Monday. It's going to be on all of our channels. You literally can't miss it if you go on YouTube and you follow us. 7:30, we're going to be on live. 8 a.m. is when the call starts. We're going to be listening to the call, and I'm going to be dropping, notes, and then we're probably going to do our own sort of breakdowns after the fact. Make sure that you tune into that. This has been the
Go to
SoFi
Steve.
Weekly Podcast. Tannor, Steve, Dildo 1 and Dildo 2 signing off.
Bye, everybody. See you Monday.
See everybody.